if I'm sort of index weighting, I should have about 4% of my US public equity allocation in private equity, something like that, 4 or 5%, right? And if I'm 60-40 stocks bonds, then maybe I should have 3% of my overall portfolio in private equity. But you look at what the quote unquote smartest people in the room are doing, and they're putting 40, 45, 50% of their portfolios in private equity. Like you look at Yale, Harvard, Brown. And by the way, like you go down the top 10 college endowments and look what percent they have in private equity. It's all like 40%. There's no outliers. There's no divergence. It is complete consensus groupthink that you should have 40 or 50% of your money in these tiny, tiny little really levered companies. And how everybody came to that conclusion and why there's no disagreement, I don't know, but it is true. And I think the sort of basic logic and facts, when you sort of hear why all this money has been going into this tiny set of tiny companies, and you try to figure out how people are going to make money off it, you're sort of like, well, why am I going to earn such higher returns by paying 2 and 20 fees, to buy tiny little companies at higher prices than public markets using a lot of debt? When those companies are mostly small and low margin, people talk about foreign stocks and they say, well, I don't want to invest in Europe because there's no European Google. There's no European Nvidia. It's like, well, there's no private Nvidia. There's no private Google. So why are you putting 40% of your money in privates? Like these are subscale, relatively crappy companies. And yet, investing massively overweight to this stuff is the best idea that all of our smart allocator friends have had.